Sridhar Sivaram, Investment Director, Enam Holdings. Sridhar, so great to have you in our studios.
Thanks for inviting me.
Yeah, I'm going to start, I think, by talking about the biggest chatter point right now, which is recent comments by a very well-respected fund manager at a very high level, talking about how time to, I'm paraphrasing here, but time to lock, stock and barrel, bolt from small and mid-cap funds. And you're seeing that pain point continue. I'm sure this has been a constant talk point or conversation point. Just wondering what you thought about it.
So if you see, when I came here 3 months back, that was something which we also had highlighted, that the large caps looked far better from a valuation standpoint than the mid caps. And there was so much of flows coming into mid caps, thanks to SIPs coming predominantly to the small and mid caps, then all the PMS money which also flows into that particular segment. So obviously there was some irrational exuberance there. We are seeing some of that getting corrected now, maybe some more for that over the next few months, because not all the earnings have been the way people would have expected. Some earnings have been good, but the expectations were so high that the stocks are correcting very significantly. We think it may continue for another 3 months possibly. And then earnings will catch up. We have some macro issues globally also and in India. So the markets are not in the best mood right now. That's how I would put. So you need some excuse for some of these irrational exuberance to go. We got some excuses right now.
This is interesting. Yesterday, Samir Arora said markets are sulking. Today, you've said markets are not in the best mood right now. But what you've said about mid and small caps is a bit of a, I would say, nuanced or tempered view, hinged only on valuations. Valuations have come down. Valuations have come down, but that's not solving the problem or the outlook, isn't it?
See, at the end of the day, what you pay for a company is the earnings growth of the future of the company.
Right.
Now, if the starting point valuation is very high, it could easily be possible that you may not make any money for, say, 2 years, 3 years. Still, there is sanity in the earnings growth. So if the earnings growth continue, so it's not like we are bearish on all the mid and small cap. There are pockets where we think, stocks have corrected and we think that earnings growth is looking very good. We are jumping in. So it's not like, and I'm sure it's the same for the fund manager whom you mentioned, that it's not, there are 5,000 stocks listed here. So it can't be that all of them have the same issue. That's the job of the fund manager to find a deep value. When markets correct like this, the good, bad, ugly, everything corrects. So it's the job of us to figure out the good and to stay away from the bad and ugly.
Sridhar, good morning, of course. And you reckon that, I heard you say in your opening answer that there is still some more to go. You reckon the good, bad, ugly, all of them, because of the falling tide, will see some corrective moves over the next, of that ensuing period?
So I think a larger part of the issue, I would say, for emerging markets, because India is part of emerging markets, will come from the policies of the US. And we're already seeing that. I think the problem for India in particular will come from the currency market. We are seeing Reserve Bank defending the currency, yesterday, and I am assuming today also. But they will not be able to do it for too long. And if this tariff policies of US continue like this, we will see emerging market currencies depreciate, which would mean that at some point Reserve Bank would have to change their stance and raise interest rates, because that's how you defend currencies. So I was very surprised that the Reserve Bank went on to cut interest rates at a time when the entire emerging market currency is in a flux and possibly will be in a flux for another 3 months. If I was in their shoes, I would have waited for 3 months. Liquidity is something which the entire banking community is asking for. I'm happy they're doing that. 25 basis points interest rates cut doesn't matter either way. But it look so difficult for them if they have to change their stance because they're trying to defend the currency. I don't know what happens there, okay? But I'm just saying that if China were to depreciate the currency by 4-5% because of the tariffs, because we are seeing tariff news every day.
How can India defend the rupee then?
Exactly. So you will have to change your interest rate stance.
No, but you can't defend the rupee, right? Because if you try and defend the rupee, then your exports take a hit, Sridhar.
So So you cannot manage all of it, right?
Right.
So at some point, if your interest rate differential is so high, then the only way you can help stem the flow, stem the currency depreciation is by increasing rates. So it's a very tough task that Reserve Bank has. Only time will say how this happens. Obviously, a currency will depreciate. What RBI wants is an orderly depreciation, which often doesn't happen when there is a flux in the emerging market, currency market, which I anticipate in the next 3 months, we'll see a few of them. So that's the challenge, that a lot of the problems or the macro issues will come not particularly from India, but it comes from the US policies, and they're very uncertain in the next 3 months. That's how I would put it.
Noted. Okay, Sridhar, so therefore, I'm guessing that while you're finding some positives in results of companies which now, because of the correction, might be trading at half decent or decent valuations, it might not still be time to go out and buy if they belong to the mid cap and the small cap bucket, because the tide itself might even carry the good boats a bit lower. So even if you're buying, I'm presuming you're staggering out your purchases.
Yeah, so exactly. So you don't know how the markets behave, and if you think this is in your zone where you like the valuation, then you buy it over a period. And in this market, markets like this, your price does come. Yeah. So if you think I want to buy at X price, you see that price has already come. Then you say, okay, I'll buy some, then I'll look for a lower price. So we've seen such markets in the past also. So this is nothing new. I started my, my investing journey in '94, and '94 to '99 was bear market. In fact, '99 I would extend it to 2003. Almost 10 years was a bear market, excepting for one year of a bull market in the technology space.
Right.
So we've seen markets like this. Unfortunately, a lot of the newer fund managers are yet to see this.
I was just going to come to that point. You've been seasoned and have seen the worst. Newer fund managers haven't. Newer investors haven't.
Yeah.
And the SIP investors is what is keeping everything afloat. I'm just wondering if that is a fear factor that the market needs to price in. What happens if SIP investors are put off with this whole mid-small cap returns, not just the fear or some statement, but the actual returns that they see?
So we've seen some corrections in the past, if you take the last 3-4 years, but the domestic investors have continued putting money in SIP. We'll know in the next 2-3 months how this is playing out. I think the SIP flows are making a big difference in reducing the volatility in the Indian markets. Because my view is that FII selling will continue, because emerging market asset class, which I have spoken many times, is a dying asset class. So we will see outflows from this asset class, not because people are selling India, because they are selling emerging markets as an asset class, which hasn't given returns for over 10 years. 20-year returns are like 2-3%.
But India was the exception.
India, Taiwan, there are two large markets which have given returns. So barring these two, the rest is all a basket case. So why would anybody want to invest in an asset class when the US markets are giving such good returns? The US debt is giving such good returns. So when a pension fund is allocating money to emerging markets, they are looking at a disproportionate return over the US markets, which is not the case. I mean, you haven't got returns for 10 years. The 20-year returns are 2%. Doesn't make any sense to invest in this asset class, is my view. And that's what we are seeing, that you're seeing continuous redemption. When I speak to my ex-colleagues, in New York, they say they continue to see redemptions in there. And money is also flowing from active to passive, which is the other thing. That why would you want to pay, 75 basis points to an active manager? He can't even outperform the benchmark. I'd rather put money in passive. So you have two issues which are playing out here. I mean, the broad, answer to your question is that domestic flows are making a big difference, and we hope that this continues. The day this starts to taper, we'll have some challenges.
Do you think it could?
I think it will. I mean, the pace of flow will surely taper. I mean, we are getting almost 30,000-40,000 crores a month if you take all the funds together.
Yeah.
I think that number will surely come down. Even if it is half, it's still good. I mean, it's still positive, right? That money has to be put into the market. But let's see, I mean, it's difficult to take a guess on that. And I'm not the expert on mutual fund industry flows, so, but I'm keeping my fingers crossed. I hope that flows continue for the betterment of our markets.
Actually, that's what I was going to invert the question, Sridhar. Long history, Indian markets, and various ways to slice the data, but long history, Indian markets have given good returns. Is this the time when the SIP investor should rather not stop the inflows because you're getting at decent valuations relative to 26,200? It may get a bit better, of course, but are you, let's say, with a 3-year view on India, 5 years too long, 3-year view, constructive on the potential returns from Indian markets currently?
I am.
You are?
Yeah, so personally also I'm putting money. I mean, you may, debate on what type of stocks you are putting money into. But I mean, that's my broad view that the market's going through a cyclical issue, some domestic issues, some global issues, which always happens. Markets are not linear. I mean, they don't go one way. So these are the challenges you face in a market over the years. And over a period of time, you will see positive returns. If the earnings growth are strong, it will reflect in the stock price at some point or the other. Obviously, there are times when, there are certain issues, markets are nervous. Those are time to, add, buy if you are convinced. If not, stay on the sideline. But over a period, I think we will do similar returns that we have done, say, in the past 5 years or the past 10 years. I mean, the Nifty returns 20 years is around 13%.
Right.
I doubt if we will not give the same return for the next 10 or 20 years, which is roughly 12-13% return. If you're expecting like 20%, 30% returns,
वो नहीं होगा, चलो ठीक है.
वो नहीं होगा, वो पहले भी नहीं हुआ. That will not happen. If you're reasonable, then there is enough and more opportunities in the market.
So the guy who's, or the lady who's invested in banking stocks, right, over the last 2-3 years, saying that there is maybe half decent earnings growth in select pockets, valuations have been reasonable, hasn't quite seen gains. Now I'm trying to get to the nitty-gritties, right? Do you reckon banking is an attractive pocket because it is large caps, it is showing earnings, balance sheets are clean, etc.? Or are you looking at, are you not necessarily that gung-ho on banking?
So if I look at the bank stocks that we invested in the last 3 years,
PSUs,
they gave us very good returns.
Yeah, that's true.
So I'm not complaining right now. Okay, but I'm not saying that we are not invested in the private sector, but I'm just giving you an example. So it will be unfair to, say that you invested in a banking fund. It's better, which if somebody asks me, I say you put it in a large cap mutual fund.
Yeah.
A large part of your flow should be in large caps. You can put a small percentage in small and mid cap because that's how returns will be over a long period of time. If that is what is being done, then most fund managers are smart enough to, figure out the portfolio within that. Now, if you go into specific banking funds or say a PSU fund or say a defense fund, those are dangerous territories.
So thematic funds are a problem.
So those are, and they typically come at the peak of the theme.
Yeah.
And that's what we saw. I mean, we've discussed this before. Then when we invested in the PSU fund in 21, the fund size was 800 crores in one of the fund. And we told the fund manager, you should be marketing this fund. And then they launched a new fund when the theme was almost over. And then we were exiting from there.
So the
I'm
cycle,
like, so that's what happens, no?
Okay, for people watching this, of course, those who have mutual fund investments are going to go that way. But looking at where the opportunities lie, are the opportunities lying in your large cap stocks, even after the kind of quarterly numbers we've seen? Just your take on Q3 as well.
I think large cap looks reasonably good. And they should, over a period, they should mimic the returns that they've given over the last 5 years, 10 years. It's very difficult to predict 6 months, 1 year. We haven't had a negative year for what, 7 years now or 6 years? It's not a norm that every year you will get positive returns in the market. This is an exception. So it's easily possible that 25 is a negative year. I don't know, but I'm just saying that it's possible that 25 is a negative year. So be it. Over a period, this will happen. it is not a norm that every year markets have to give positive returns. That's not how it is. So investors have to learn that there can be years where you get negative returns. It could easily be 25 because we have so many question marks. As I said, not coming mostly from India, coming from outside India, which we have no control on.
Last question from mine at least. If the Indian scenario looks okay, which means that Q4, the cyclical bounce back happens, the government capex steps up. I mean, it's on record that they have to spend this much. So let's assume all of that happens. And then, the spending happens as is the boost that the government has given on consumption, etc. Is there raising hopes for at least a better performance on the economic front? There might also be the base effect at play. And could that help stock sentiment?
So I'm not sure of Q4. First of all, this 1 lakh will not happen. It's not happening in Q4.
No.
It may not happen in Q1 and Q2 also. Keep in mind that this is salary, which comes every month. A large part of it will come in the second half, which is every month it comes. And you and me are also beneficiary of this. I'm not complaining right now, but the point is that, of all the 3 crore taxpayers are beneficiaries in some form or the other of the tax benefit. Will I boost consumption? Maybe not. But maybe the 75 lakh who are at the below 12 lakhs, they will benefit. So it will happen, but again, capex, we've seen it's a constraint. I mean, there is only that much that the government can do. I'm a bit worried on this, this Ladli Behan type schemes now becoming a norm for every state. Delhi had it, now you'll have Bihar, you'll have UP elections coming up. What we hear is states don't have money for capex from infra companies, and they are very worried because they're not getting their dues. Those are worrying signs. So I'm not saying that, everything is perfect from Q4 onwards, earnings goes up. I think the earnings also have cycles. So we will see some challenges in Q4 also. I think the second half of next financial year looks better. That's how I would put it.
Okay, so brace in for at least another couple of quarters.
Yes.
2 or if not 3.
Yes.
So thank you so much, Sridhar,
Thanks
for speaking with us today and giving us all your insights on what is turning out to be maybe a tough year. It's okay if 2025 doesn't give positive returns. It happens. As someone who's been, cut his teeth at the start of a bear market.